Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, October the 21st, the year's 2020. Let's talk trading. When to quit part 2 with Walmal. But before we get started, I just want to remind you these videos are for educational purposes only, and your results may differ from mine and from Walmal's. Good morning, Walmal.
Good morning. How you doing, sir?
Oh,
Hopefully you're having a good day.
yeah, well, I got other stuff to work on today, but I wanted to put out a video for the boys and girls and the non-binary traders out there. So you said you watched my video yesterday, so let's hear your take of when to quit.
Well, I agreed with everything you said in the video, but the one thing that I also wanted to go and chime in on is know when to quit. Is that this trading thing is a psychology thing, and sometimes you get to your desk and you're just not up to par. You just know that you sat down, you're just not feeling right, you don't feel good. Maybe that's the time to quit. Maybe it's a time not to even get involved right off the bat. Why get yourself into a situation because you're not thinking clearly? So I know that that's what I do sometimes, and I think I've been on the phone with you once or twice, where I've just said, you know what, I'm just not trading today. I just don't feel good. I just don't feel right. I'm quitting, because I'd rather quit and not make money, but also, more importantly, preserve my capital so I can come back and fight another day, so to speak. It's a friend of mine who was a trader. One of the things he said the most important thing, it was probably one of the most important things I ever learned about trading, but he said, preserve your powder. And, going back to that reference from, the old days of wars where you actually had to go and worry about not bullets, but you worried about actual gunpowder and stuff. Preserve your powder because you can't do anything without having powder. And that's the truth about it. So preserve your powder at all costs. Know when to quit because you need to preserve that powder.
Well, that makes sense.
Yeah, so I think that that's very, very important. And so if you're sitting out there and you just and this can even be extended to some other things as well. Maybe you just sit down at the market and it just doesn't look right to you. It just doesn't move the way you expect it to move. I'm a big proponent of trading one instrument and knowing that instrument really, really well. And I know, Tiro, you'll tend to go and sometimes trade other things as well. But that's just not me. And and if you can go and do that, that's great. But for me, that's just not a thing that I want to do.
Yeah, I haven't done that in a while now that you mention it.
Yeah. Well, but for me, I want to know this. I want to know this instrument so well. I know when it's going to go and do whatever it goes and does. And there's just so many things. We were just talking on the phone a few minutes ago that hey, it's going down into that launching zone, and it's just a euphemism for we talk about when it gets down into that station between 40 and 50. It likes to go down there, and when it goes down there, a lot of times it'll just rocket back up, and we're sitting down there right now. Now, I don't know if it's going to do that or not right now, but the reality is that when you go back and look at the charts, especially when you look at the charts forward-seeking, and what I mean by that is you're watching the charts and you're seeing what it does on a day-to-day business. You see that a lot of times it gets down there somewhere between 40 and 50. It likes to take off and run up to that 60, and it just does it so often. Well, if you get a day where it goes down there all the time and it just doesn't do anything, just meanders down there all day long, well, that tells me that there's just something different today about that instrument. Maybe I don't want to trade it. Maybe the way I'm used to seeing is just different, so different that I can't go and do well with it. And so I just need to go and quit. And why go and put money at risk and take a chance of losing money, losing my powder because it's not doing what the market normally does. I was talking to you earlier where it was interesting that the news that came out for the pound early this morning in the early hours was, relatively very bad for the pound, and yet the pound went and shot up on that hour like 60-something pips. You know, that's strange. That's unusual. You know, that's something that you wouldn't expect it to do, but you know, it did do it. But at the same time, you know, I've been saying to you over the last couple of weeks, for whatever reason, if the news comes out good for the U.S., for some reason, it goes up. If the news comes out bad for the pound, it goes up. If it, you know, and the opposite's been true as well. If the news is good for the pound, the market's been going down, and if the news has been, excuse me, if the news has been bad for the U.S., you know, it's funny because it's been going down, and that's the opposite of what you would expect.
Well, no, if it was bad for the U.S., the pound U.S. goes up.
Right. That's what you would expect, but it's been going down, you know. And
no, if it's good for the U.S., then the pound dollar. I think we got a couple things backwards. It's like it's the opposite. Good news for whatever currency, you trade the opposite way.
Yeah.
So if it's good for the pound, that's bad. That you're short. If it's bad for the pound, you're long. If it's good for the dollar, you know, you're short. If it's bad for the dollar, you're long. For whatever reason, that's something we both have observed. Hey, that 50 line would have paid 2 pips. Did you get it?
I did. I went and grabbed that real quick, and that's another thing too. Is that like today, for whatever reason, you know. Well, the thing is, that's probably the right trade because the short on this hour is way up to 70, and this is actually usual. So, you know, my Walmal trade at a 50 here, I'm already 20 pips into the hour. You know, if I'm going to go and grab it, I'm only grabbing 1 or 2 pips. So, you know, and that's part of quitting as well. I'm just going to go and quit. I'm just going to grab my 1 or 2 pips. You know, sort of like I know you like to call that a smash and grab.
Right.
You know, just go and grab it. Grab what you can at that moment in time. Because the reality is we've moved 26 pips this hour. We've gone 69%, you know, in terms of what it typically moves in an hour. And we've already 20 pips off of where my normal entry would be. Why would I expect it to move further? Could it? Sure. We had that 1 hour, like I was referring to earlier, where it went and moved 60 pips. The likelihood, though, here it is at 1:45, you know, only 15 minutes left in the hour. The likelihood of it happening statistically says nope. So you know what I do? Take my pips and I quit. And that's it, you know. And that's it. And just leave it alone.
Yeah, so right here, that 50 to the short side would have been worth a couple of pips if you were quick, and just now it went to the north side. On my chart, it hit a high of 51.4. So once again, if you were quick, bam, you could have been out with the
right.
quick,
and that's the
profit.
Thing. You just got to go and you know and know that okay, you know we're like I said we're 45 minutes into the hour at this point in time, 47 minutes into the hour. Well, you know, take what you can get. You know, or what I tend to do is that, and Tiro will attest to this, I do not like to go and trade at this time of the hour. I took this because it was nice and easy. It was to me, it was pretty obvious for a number of reasons to go and take that. But I went and pressed the sell button and had my finger on the close button. You know, I mean, literally right there. And as soon as I saw that thing go and register those 2 pips for me, bam, just out. You know, and that's how I go and get out of that trade. But I don't like to go and do it. But what I prefer to do is, okay, we're 45 minutes into the hour, I'm quitting. It's, you know, go take a break. You know, get yourself a cup of coffee. Do whatever you do, you know, get your mind back, you know. Because, you know, when you're staring at the charts, it's, be honest about it, you know, our human brains are only meant to concentrate for a certain amount of time before they start to quit on us.
Right.
You need to go and take those breaks.
Yeah.
And
yeah, I was going to say something, you know, because we're talking about when to quit. And I was wondering about, because you know how I like to tease you about you being an addict, about, you know, when you trade past core.
Yeah. I just took another 2 pips, by the way, on that trade.
What, the short at 50?
Yeah.
Yeah.
Anyway, continue. I'm sorry.
Yeah, I was going to say, you know, about when to quit. You've told us you have a daily core of 10 pips, but you trade beyond that. Seems like on a regular recurring basis. How do you justify that?
Well, the thing is, I'm justifying it because I think last week, I believe it was in a video, I had said that as long as I hadn't lost 3 trades, I'm going to go and stay in it. So that's the first part of it. The second part of it is I've been profitable doing it. So why quit something if I'm profitable doing it? And then what I've found is what's helped me tremendously is that I get my core. Then what I like to do is get a second core. In other words, I want to get 10 pips, then I want to get a second 10 pips. So now I'm up 20 for the day. What that does for me is it gives me some freedom, because now what I can do is, you like to go and call them, getting the big pips.
Oh, the mega trades?
The mega trade, the mega pips, because now I've got 10 pips that I can sit there and I can lose all 10 of those pips, and it doesn't affect me. It doesn't affect me financially. It doesn't affect my trading plan. So I like to go and get that extra 10 pips so that I can go and take on those other trades. And, we'll have to do a series at some point in time anyway about how we follow the dots / following the balls from the 3ZZ. The problem with following that is a lot of times you'll go up and you're up 5 pips, 6 pips or something like that, and the next thing you know, it turns around and now you're negative if you do that. But if you still continue to follow it, you could actually wind up being up 20 or 30 pips. Well, here's the thing. If I'm up an extra 10 pips, I've now got the freedom to go and do that. If I lose the 10 pips, do I like losing those 10 pips I've already earned? Nope. But I have the freedom to go and do it because it's not going to affect my account. Right. And it doesn't affect my what I need to earn for the day.
Right. Hey, the other thing was I mentioned to you before we turned on the video. There was a trader that was asking about how much percentage you make in a month, and I said, well, and not to be rude, but I said, really focus on your own accounts. Don't worry about what I'm doing. Don't worry about what Walmal's doing. Focus on your account, your skill, because that's all that matters. It doesn't matter if we make 1% a month or if we make, double our accounts. It just doesn't matter. What's your take on that?
Oh, I agree, because the thing is, it's sort of like it's funny because I used to live in a suburb. I don't anymore, but I used to live in a suburb. And it was so funny because, you look at all your neighbors, and everybody in the suburb did the same thing. You always look at, I called them grass farmers because everyone was growing grass on their front yard, right? And it was like this competition, who's going to have the best front yard. And everyone's worried about what Charlie down the street is doing to his yard, or what Joe is doing to his front yard to go make his grass greener. Good gosh, guys, worry about what's in your own yard. Take care of what's in your own yard, and when you take care of what's in your own yard, your grass will be greener. And that's what we have to do as traders, because you know what? For me, these are arbitrary numbers. Maybe making 2% a day is all I need to do, and it's great, and I feel very comfortable doing that with the amount of risk I have to put on to make 2% a day. Whereas, Kiro, you could go and say, you know what? Yeah, I'm comfortable going and making 5% a day, but in order to make that 5% a day, I need to risk, risk times 2. What my risk was times 2. And whereas you feel comfortable doing it, I don't. And that's why that's such a hard question to answer, because it really doesn't, you can't give a good answer to that, because everybody's risk averse at some point in time. The question is, where does your risk aversion come into play? You have to figure that out. And the only way to figure that out is to get in to trade, okay, with real money and keep on trading up until you find that wall, and then back off a little bit, and then trade there until you're comfortable there. And then if you can go and raise it a little bit, that's great. And you've seen me do that over the last, 6-7 months or so. Probably more than that, 9 months, I guess now, where, I was trading at one particular level, but over time, I've been adding a little bit, because I get to a place, I'd hit that wall, and I would feel very uncomfortable there.
And you know what?
A little bit.
We hit the wall of almost 15 minutes. So, fellow traders, I hope that helps you a little bit more knowing when to quit. because it's not what you trade, it's how you trade it. So go out there and drain the banks. And if this is your first time here, welcome aboard. Click subscribe, click like, and share the video. This is the Rumpled One, over and out.